Yes, it is there on your screen.
Yes.
Is it? It's a very, very small concepts we are going in detail. Okay? Small concepts we are
Okay.
going in detail. This is with respect to intangible assets. Intangible assets standard is IAS 38. Okay? Intangible assets standard is IAS 38 as such. Okay? What we are doing, what we will see what are, people say that if they are talking about intangible asset, we'll say that this is the goodwill. Okay, you will have the good examples of intangible assets. You have the goodwill, you have the trademark. Okay, you have the trademark, you have the copyrights. Okay, you have the copyrights. Now you have the patents will be there, licenses will be there. Okay, there are so many things which are going on and on and on. Okay, what is the basic concept? How the IFRS will define the intangible assets. What are the criteria? What are the conditions? Okay, when we put the things, okay, first what we'll do, we'll say nature and accounting treatment of internally generated and purchased intangible assets. See the thing. First and foremost, internally generated intangible assets is not recognized. When I say not, we say not recognized now means it is not recognized anywhere. If there is it is externally generated, we can recognize. Is it? Is it? Or you can put like this: internal generated, very simple, internal generated goodwill. Okay, internal generated goodwill will not be recognized. We will go further in detail. What are the things? How there is a classification. This thing we have to differentiate goodwill and other intangible assets. Is that goodwill is going to be in IFRS 3 business combinations when there is a acquisition. Okay, when there is acquisition, it will be treated as an intangible asset, but it will be routed through IFRS 3 business combination. And the goodwill is different, and all other intangible assets are different. Keep it in mind. Goodwill is exclusively apart from all intangible assets. That is the reason. Differentiate between goodwill and other what is the criteria? How we have to initially recognize and how you have to be value at the end of each reporting period. Now you understand the way things are working. Okay, initial recognition at the end of the reporting period, subsequent measurements. Okay, subsequent measurement. What is the subsequent accounting treatments of intangible assets at reporting date? Whether it will be at reporting date, whether it will be at that, maybe if you are disposing of, at the disposal date. Okay, at the disposal date. How we have to measure it. Describe and apply the requirements of IF 33. There are two things is there. Research is there, development is there. Research will be always be expensed. Always be expensed in statement of profit and loss account. Development is to be capitalized. You are underdoing this. Don't forget the concepts which you are learning now. It will help you to clear the SBR easily, very easily. Okay? Okay? That don't not ever a single exam is over. Don't say that I will forget about this. No. Is that we are talking about the research and development. Is that there is another standard for research and development. The chapter provides a recap of a file. Okay. The principles of knowledge gain will also we will come across in SBR. Okay, and it will give you a good evidence with respect to audit and assurance. Okay, now when we do the things, I just told you. Okay, what is the goodwill? Goodwill comes in IFRS 3 business combinations. Okay, goodwill comes in IFRS 3 business combinations separately. IS 38 intangible assets, IS 38 how to treat research and development. How to treat research and development. IFRS 3 goodwill definition, you will have the positive goodwill, you have the negative goodwill also. If there is a negative goodwill, we will use the word cost of control. Okay? If you use the word cost of control. Okay, intangible asset definition, recognition, and amortization. Okay, amortization. If there is a fixed life of the intangible assets, usually licenses, is there patents, are they? We are having. If they will mention very clearly whether it's a fixed life or it is an infinite life. 38. Okay, regarding research and development. Okay, definition, accounting treatment, and amortization. How it has to be proceeded. Okay, now when you do the things, what is the definition? Okay, an intangible asset is an identifiable non-monetary asset without physical substance. This we know. Is it? This we know that it is a without any physical substance. What are the examples of intangible asset? Licenses are there. Is a quotas are there. Quotas is nothing but number of units, number of people, number of products they will give. They will not give more than these products. Okay, will not give more than these products. Asset that is called we call as a quotas. You have the patents, you have the copyrights, you have the brand names, you have the trademarks. These are the examples of intangible. For an asset to be identifiable, ISA 38 says that it must fall in one of the two categories. What is the intangible asset? How it has to be classification? Classification is very important. It is separable. It should be separated. Okay, you have to separate it. Brand name, you will separate it. Okay, brand name, you will separate it. Trademark, you will separate. You are selling only a trademark. You are selling a brand name. The asset can be bought or sold separately from rest of the business. We are not purchasing the complete business. We are just purchasing the brand. Okay, we have just purchased. If that Tesla is purchasing the previously it is Twitter, they are purchasing the brand. Okay, they are purchasing the brand. This is where it will happen. It is arises from there is a legal. You should get a legal right. Okay, you should have the license, permission that will arise. Either you can purchase the entire company. Is that? That's the reason I told you. Tesla purchased Twitter X completely. This will be looked as a further in consolidated statement. How the intangible assets will arise? It will arise either you are having a legal or contractual rights, or you will have a purchasing the entire company. Is it right? Is that part of the purchasing an entire company? It must also meet the definition of an asset. What is the asset? It should give you a future economic benefits. Same asset, is it right? It is a result of the past events. Is that controlled by the entity as a result of past? You have paid. You have a control over the asset, and it should generate future economic benefits for you. Okay, now are you clear about this?
Yes.
Now slowly and steadily, how you have to recognize it? The recognition must meet that there should be an intangible asset. What we have done that with no physical substance. Is it right? The recognition criteria, it is probable. See that probable. We use the word million times. Most important word that the expected future benefits to the asset will give flow to the entity. Means in future there will be a cash inflow. As simple as that. Probable means more than 50%. More than 50. The cost of the asset we can measure reliably. The cost of the asset. If these criteria are met, the asset should be initially, how you have to recognize, first time. Initially, first time, it should be recognized at cost. There is no doubt on that, okay? If the intangible asset is purchased separately, such as you are purchasing license, you are purchasing a patent, you are purchasing any doubt anywhere, any word, let me know. You are purchasing a brand name, it should initially recognized at cost. How much you are paying at that point of time? Is that how much you are going to pay at that point of time? It should be recognized. Okay, it should be recognized at cost. Here also they have mentioned very clearly. Here also where they say they should be recognized at cost. The other part it should be recognized at cost. Okay, that once you have done that, okay, once you have done that, measurement after initial, after, is it right? Initially it will be, see, you will put like this, okay, initially, is it right? Initially it will be at cost, and after that you have the options. Is it right? After that you have the options. What is the options you have? You have two options, okay. Either you can go for a cost model or you can go for a revaluation model. You have the, but initially you don't have any option. You have only that. What is the cost model say? Cost model say that it should be carried out at the cost less amortization. Is it cost model say that? Cost minus amortization. This model is more commonly, we use this model most of the time. Amortization is similar, works in the same way as depreciation. Is it? That intangible asset amortized over the useful life when the annual expense been shown in the statement of profit. Means amortization more or less. Nobody will say both are same. Both are entirely different. They say same as, similar to that. An intangible asset with a finite useful life. If you have known the life of the asset, you have to amortize it. Using which method you have to use? Always straight line method. Is that straight line method with a no disposable value? And these are the basic conditions. Okay, an intangible asset with indefinite life, we will not, if it is an indefinite life, we will use what? We will use impairment. This is the standard one. If it is a definite life, finite useful life, we use amortization. If it is an indefinite life, we use impairment. Is that we use impairment. If the revaluation valuation model is used, you will revalue the carrying amount using the fair value. Is it right? Using the fair value less any amortization. Okay, any amortization or impairment losses. Fair value should be determined with respect to the active market. Is that we have done? Okay, we have done. Is it right? We are going to based on what we have. What is the current value is there? Okay, what is the current value is there? Theoretical points they are giving lot of importance. And what is the active market? An active market is a market where transaction takes place with frequency and volume to provide information in an ongoing process. Active markets, is right? Means there is good frequency. Is that there is good? People are buying, people are selling. People are buying, people are selling. Because when we have the active market, we can come to a conclusion that we can have very clear what is the fair value. Okay, what is the factor? Now, what they say, but think what they say. Every time you are not going to have a purchase and sale of intangible assets. Okay, never happens. Intangible assets state that active market for intangible assets are very, very rare. I'm underlining 3 times on this. It is very rare. It is not every. See, once upon a time, Tesla will buy X. Okay, Twitter. Is it right? It not happens every time. Okay, once in a while, there is a merger will be there. There is acquisition will be there. Okay, every time it will not happen. Means intangible assets cannot be sold all the. There will not be an active trading. It specifically prohibits you cannot reevaluate patents. Patents is nothing but you see where we are using the patents usually. A simple, very simple example. Okay, very simple example. On the water bottle, on the drink water bottle which you are purchasing, on the water bottle, what will happen? There is a combinations will be there. Is that the combinations of all the whatever the contents of the water. Okay, every water bottle will have a different combinations. One combination will never meet another combination. Okay, means it specifically prohibited. It specifically prohibits patents, brand names, trademarks, and publishing rights. Okay, now as a guide, indicators of active market. What is the active market? The items traded within the market are homogeneous. Similar, you can compare identical, similar products only. We cannot compare different products. Okay, you cannot compare different products. Okay, we can compare service provider with the petrol pump. You take the thing. You take the petrol fuel station brands. You use it that it should be similar. It should be identical. You cannot compare a product with automobile industry with a product in the telecom industry. Airline industry, similar product. Every time you are not buying and selling, you will not come across these type of transactions frequently. Okay, that is the reason the items should be items traded with market should be homogeneous. Homogeneous means identical. Prices are available to the public. Again, when you are doing this, all things are very, very rare. All things are very, very rare. Okay, most intangible assets have value because of uniqueness. As simple as that. Unique, they are unique. That is the reason they will have the brand value. Therefore, unlike means they will not be homogeneous. They will not be. Every brand will have its own value. Okay, every brand will have its own value. Is that the brand value makes the difference. Certain licenses may fit this model, could possibly be revalued, but most other tangibles will not. Now, what they want to say, the message is intangible assets are always there is a uniqueness. Is that my goodwill will be my goodwill, your goodwill will be your goodwill. Everyone will have their own goodwill. Okay, everyone will have their own strengths. Everyone will have their own skills are there. Okay, those skills. Though you cannot copy the skills, you cannot. Every brand will have their own popularity will be there. Are you clear about this?
Yes.
Now, is it now what is the internal generated intangible asset? Internal generated, see, very simple. Remember this, memorize this. It will be very important. Internal generated intangible assets cannot be capitalized. You cannot say, I cannot say my value is this much. Somebody has to tell what is my value. Is it right? I cannot say that I am going to have my goodwill is this much. No, we cannot identify like this. Somebody should recognize me. Then only there will be a goodwill for me. Is that cannot be capitalized internally. Externally can be capitalized. Keep it in mind. Okay, externally generated must be capitalized. Is that external? Whereas internally generated cannot be capitalized. As the cost associated with this cannot identify separately, and the cost associated with running the business. See, you are developing over a period of time. Okay, you are developing over a internally generated will not be capitalized. The following are the internally generated items. Goodwill. Is it right? Good you are getting you are developing goodwill for your own. You will have the brands, you have mastheads, okay? You have the purchasing titles, you have the customer list. You have the database. Is it right? No, internally generated cannot be capitalized. That much keep it in mind. Now, okay, they are giving you a small examples. What are the brands? The accounting treatment of brands has a matter of controversy. IS 38 has now ended. They have now ended the controversy by saying that internally generated brands and similar assets may never be recognized. Simple one. They're not going to put any conditions on that. Clarity is very specific. Is it internally generated will not be recognized. Expenditure on internally generated brands cannot be distinguished from the cost of developing the business as a whole. Should be written off as incurred. Written off means it has to be expensed. Expense to statement of profit and loss. Is there anything you are incurring, or is there anything you are incurring to create the brands? Okay, to create the brands, what you have to do? Those expenses, advertising, promotions are there. Okay, you are creating some events you are creating to create a brand. Those should be expensed in the statement of profit and loss. Where a brand name is separately acquired and measured reliably, then it should be separately recognized as a intangible non-current asset. What they are saying, if it is acquired and if it is measured reliably, two things are very clear. You have to purchase and it should be measured reliably. If you are doing this, then only it is going to be identified as a non-current, intangible non-current asset. Is it okay?
Yes.
Okay? Now, they gave you a small. How should the following intangible asset treated? A publishing title acquired as a part of subsidiary. Publishing title acquired. Is that? No. Publishing title acquired means publishing purchased as part of subsidiary company. The title depends whether the asset is valued reliably. You have to value reliably. Neither you should overstate or understate. This is the first point. If this is possible, what is the second point? The title will be recognized at fair value. Otherwise, it will be treated as a part of the goodwill. Otherwise, the third point, it will be treated as a part of goodwill on acquisition. Means you have, what other things are there? You should measure reliably. If you are measuring at the fair value, if this possible, it should be measured at the fair value. If this is possible, then it is treated as a goodwill on acquisition. Otherwise, okay, if this is not possible, what they say, if you what is the they are publishing, you are acquiring a title. That's all. When you are acquiring the title, the first condition is you have to measure reliably. The second condition is you have to measure fair value separately, because we are purchasing it as a separate only publishing title. If we cannot measure reliably or we cannot measure on a fair value, then we have to treat it as a goodwill. Is that, see the thing? If it is reliable and it is at the fair value, okay, fine. If we cannot do that, what is the alternative? The alternative is you have to treat it as a goodwill. Means when you are talking about, you are combining all the things. Okay, you are combining all the things and you are putting it in the concept of a goodwill. We will do goodwill calculation. Okay, we will do goodwill calculation at a later stage. A license purchased in order to market a new product. As the license purchased separately from the business, it should initially capitalize at cost. The rule says that initial recognition should be at cost. Okay, initial recognition should be. See, you are here. What is happening? You are purchasing separately. See, this is the difference. You are purchasing separately. When you purchase separately, we can identify as a cost. If you don't purchase separately, then there is a issue. Okay, what is the issue? You have to separately value it on a reliable basis. If there is a possibility, you have to do it on a fair value basis. Otherwise, you have to treat it as a goodwill. Means, what is the difference between the first and the second one? The first and second one, it is a part of the transaction, and this is the separate transaction. If it is a part of the transaction, keep it in mind. If it is a part of the transaction, there is a fair value. If it is separately, it is going to be the cost. These things they will ask. These basic small things they will ask, whether it is going to be at a fair value or at the thing. Is that I will put this? Is that I am putting wherever it is possible? It is somewhere you will come across in MCQ questions. Are you clear about this?
Yes.
Okay, now they are talking about the goodwill. Goodwill is the difference between, see, you are the value of the business as a whole and what is the fair value of its separated net assets. Difference. Okay, what is the value? What is the value of the goodwill? Is it what is the, you will say, what is the purchase consideration? I am little bit in advance, but I am telling this is nothing but the market values. Okay, market value. Market value is, take 10,000. Okay, minus fair value. Okay, minus fair value. Is that fair value is 8,000. You are paying more. Okay, you are paying more. This is going to be 2,000 is going. I am giving a very, very short and very specific. 2,000 is the goodwill. If the market value is 10,000 and the fair value is 13,000, the value is more, you are paying less. How much is there? You don't say we in simple terms, they will say it is a negative goodwill. Okay, then simple terms they say it is a negative goodwill. In specific terms, they say it is going to be called as a cost of control.
If it is positive, it would be cost of control.
If it is positive, it is goodwill.
Okay.
It is positive goodwill. We don't use the word positive goodwill. We will use only the word goodwill.
Okay. If it is negative, it will be negative goodwill.
Yes.
But what about cost of control?
Both are same. Either you can put it as a negative goodwill or you can call it as a cost of control.
Okay.
Okay, basic. I am telling you now. For the next level, you are almost covering 30 marks straight away. Straight away, you are covering 30 marks. Is it separable net assets? Are those assets and liabilities identified and sold off separately without necessarily disposing the whole of the business? You are separately selling some assets and liabilities. People will do. Okay, people will not sell all the business. People will sell the business which they don't need. Okay, they include, in some time they include intangible assets. What are the things you will have? You are selling only some specific things. They will have some patent. They may have include licenses will be there. Okay, separable net assets, which can be identified, sold off separately. Fair value. Have you done fair value before, yes or no?
Sorry?
Have we done fair value before?
Yes, you did.
Yes. Okay. It will be there with us in all the cases. What they say, again they are repeating, the price that would be received to sell an asset to transfer a liability in an orderly transaction between market participants at the measurement date. The very few cases, I will tell you this, you memorize this. Okay, simple one, it is not difficult. What is the price to be received? I am not saying exactly, but the message, if you are writing, the message should not be different. They would represent to sell an asset or paid to transfer a liability in an orderly transaction between orderly, normal way, okay, in the market participants at the measurement date. Okay, that is the fair value. Okay, that is the definition. It will not change. Again, I am saying that here we are talking about the basics. Goodwill may exist because of any combination or number of factors. What is the goodwill? You are talking about the quality of the service. You are talking about the technical expertise. You are having a good contracts, good business contracts, future contracts. You have a good management and staff. It will create goodwill, is it right? It will create a good name. People will come. People will give references. This is the thing. Be there. Okay. Automatically, you are going to generate more economic benefits. These are the reasons. Okay, factors. Purchase or non-purchase goodwill. What is the purchase goodwill and what is the non? See, basic things. Again and again I am repeating. Just have a good understanding. Purchase goodwill arises when one business purchases, acquires another as a going concern. Running business, okay? Going concern means you have done in auditing. What is the going concern? It will be there for the next 12 months from reporting date. From reporting date, it is right, or you are going to say that it is going to be foreseeable future. Very specific, we are using this terminology. It is a possible purchase goodwill, includes goodwill on consolidation of a subsidiary. Goodwill will come. Will be recognized in financial statement at its value at a particular time is certain. Here we will say, will be recognized if we know that at this time, at this point, we are going to have the goodwill, we are going to purchase it, we are going to acquire it. Time is certain, okay? Then only it will be given priority. This is the purchase goodwill. Not is the non-purchase goodwill. You will get the inherent. You will get the goodwill over the time, over the period, okay? First generation, second generation, third generation, people are doing business, okay? That is a non-purchase goodwill. No identifiable value. Non-purchase goodwill, no value will be there. is not recognized in financial statements. In simple terms, internally generated goodwill is not recognized. Okay?
Okay.
Now, another one, IFRS 3. This is exclusively for goodwill. That's all. All, if you take IS 38, goodwill be one side. IFRS 3. All other things will be on the other side. All other things, okay? IFRS 3 governs accounting for all business combination and deals with the accounting treatment of goodwill. What is the goodwill? Is the as a asset representing the economic benefits. Okay, what we have acquired. Okay, what we have acquired in a business combination. Okay, that we are purchasing a subsidiary, we are purchasing another company that are not individually identified and separately recognized. See, if you are working with another company, is it right? Another entity, another business combination, value will increase, as simple as that. Okay, value will increase. Is that if you are working alone, value will be less. Okay, if you are collaborating, if you are having understanding, okay, if you are understanding, automatically the business will increase. Very simple. Is that it is nothing like that we have to think. If you are working in coordination with others, what will happen? The future business will increase. That is what in a basic they are representing the future economic benefits. Is it arising from whether it is a purchase in a business combination? That is not going to happen individually. Goodwill. Negative goodwill is again called as a bargain purchase. Now see the thing. Negative goodwill. You have a negative goodwill. You have a cost of control, and another name I am adding. It is otherwise called as bargain purchase. All are same. Okay, all are same. Don't get other. It is a bargain. Otherwise, it is called as a bargain purchase. Don't get. You will use interchangeably. Is it? We use interchangeably. Most of the time, we use either cost of control or bargain purchase. Is it? Negative goodwill is treated as an income. Why it is income? Why it is income? The value is more. Fair value of assets. The value of assets is 10,000. How much you are paying? You are paying how much? You are paying less amount. Okay? You are paying less amount. Okay? You are paying less amount. Okay? Means it is a gain. The purchaser has paid less than the fair value of the net assets. Okay, the purchaser paid less than the fair value of the net assets. Keep it in mind. We will cover detail in chapter 18. Okay, that is the negative goodwill. Accounting for non-purchase goodwill. Here, purchase goodwill, non-purchase goodwill. Non-purchase goodwill should not be recognized. Again and again they are telling in you in a different ways. Okay, different ways. It should, if you are not purchasing, it should not be recognized. It certainly exists. Fail to satisfy the recognition criteria. Fail to satisfy the recognition criteria as per IAS 38. Since it is not, we cannot measure reliably.
So, Doctor, how many chapters in this
20, 21, 22 are there. Small chapters, not big ones, okay? Small chapters, okay? We will cover this. It's not big chapters, okay? Small chapters.
Okay.
Okay, don't get panic on that, okay?
Okay.
We have to do now see. Okay, inshallah khair. Okay, now what is the research and development? Okay, we have covered what we have covered. We have covered about the goodwill, positive goodwill, negative goodwill, purchase goodwill, non-purchase goodwill. Okay, internally generated goodwill, externally generated goodwill. We have covered a basic understanding about this. Now, what is the next one? You have the research and development. Research, see what is there. See the thing. This is where it will happen. Is it? This is the research. Okay, this is the research, and this is the development. Research is in process. Okay, research will be in process. Either it will be success or it will be failure. Development is success. Once you have succeed, then you will manufacture. Research is originally and planned, it is an investigation, prospect of gaining new skills or technical knowledge and understanding. It is a process. Okay, we are doing some investigation, what will happen, what will not happen. Is it? Now, what is the development? Development is the application of findings. Is that application? Once you have succeeded, you will start manufacturing. Knowledge to plan, design for a production. Once it is successful, you make a production of new, improved materials, product, devices, systems or services. Before what we'll do, once there is a development, then there will be a commercial production. Development means this. Now this is the most important. Research should be write off as a expense in the profit and loss account. Is that research should be written off as an expense? 100%. No other option. Full stop means full stop. Development expenditure is an intangible asset. If they satisfy all the conditions, if and only if an entity can demonstrate all of the following. What is the development? There should be a probable economic benefit from the asset. Either you are selling the asset or you are making a cost savings. What is the thing? See the thing. What they say, they are talking about intention to complete the intangible asset. The intention is to complete, either to use it or to sell it. It has to be reliably measured. It has that should have a resources to complete the project. You have the technical feasibility of completing the intangible asset. Either you are going to use for yourself or you will go for sale. All the time, keep it in mind. What they are saying either you have to use it or you have to sell it. Either you have to use it or you have to sell it. Is it? It is either for the sale or it is for a internal cost savings. Okay, now expected to be profitable. The cost of the project will be exceed the benefit. Expected to be profitable. Is that it should give that thing. Now what they have mentioned, they have mentioned one PIRATE, pirate. Is that probable flow, intention to complete, reliably measure, adequate resources, technical feasibility, expected to be profitable. This they will ask. Okay, they will ask. Okay, in MCQ they will ask. Is that if it is only expenditure incurred, it is only incurred after recognition criteria. Is that it has to be met, which can be met and should be recognized as an asset. Development expenditure recognized as an expense in profit and loss account cannot subsequently reinstated. Once you have expensed it, okay, once you have shown it as an expenses, again you cannot show it in the balance sheet. Okay, again you cannot show it in the statement of financial position. Means you have to be very careful. Once you have done, again you cannot go back and you cannot change it. If an item of plant is used for development process, machinery, the depreciation of the machinery should be added to development cost. Is there anything that what we are doing? See, we are just nothing is there. Don't get anything. We are calculating depreciation on the plant. As simple as that. Okay? During the period, it meets the development criteria. This is because economic benefit gain in this period is only realized for development project is complete. What you are doing? You are making a matching concept. Okay, you are making a matching the revenue. Okay, matching the revenue with the cost. Here the cost is what? Here the cost is depreciation. It will be taken to the statement. We are showing in the statement of profit and loss account and amortization. Is it right? This is where we are talking in terms of accounting treatment. What is amortization? Amortization, see, what is the amortization if it is a finite life? Development should be amortized over its useful life. Useful life is nothing but the finite life. Okay, as soon as we have started the production process, we have to start the amortization process. On which method we have to do amortization always? Which method we have to use, straight line method or written down value method? Straight line method. Okay, straight line. Fine. Now, tell me this separately. How should these costs treated in the financial statements? 1,000 spent on initial design, work of a new product. The design will be taken forward over the next 2-year period to be developed and tested through production in 3 years' time. To be developed and to be tested. It is.
It's a course, development course.
It is a research or it is a development.
This is research.
Good. Okay, it is research, it has to be expensed. Profit. Statement of profit and loss. Why? You have to give reason. It is to be developed and tested. Still it is not, is it right? With a view, production will be how much? Production will be after 3 years time. Is that production will be after 3 years time? Means it should be expense. Next. Will be in operation. It is research and development.
Develop.
Is it right? Because reasons, okay? Because you have to be very strict. It is successful, it will be in operation, okay? It will be in operation, it will have the cost savings, it will reduce the cost of production, okay? It is reduce the cost of production and it will be there in the, these two are very clear, okay? These two are very clear. Are you clear about this?
Yes.
Next. All are examples. Okay, 1, 2, 3, all are examples. That's all. We have done the theoretical part. Now we are just working on the examples. Now, an entity has incurred the following expenditure during the current year. How they explain the accounting treatment? A brand name relating to separately, everything make it separate. Okay, everything make it separate. A brand name relating to specific range of chocolate bar purchased. Brand name has been purchased. How much? 200,000. A brand name has specialties are revalued. Fair value. Okay, it is a fair value. Fair value is how much? 250. What is the purchase price? 200. What you have to do? If you have purchased it, it should be expensed or it should be capitalized. When you are purchasing,
Capitalized.
it should be capitalized. Now, brand has a similar, any homogeneous similar product is there, you have to make when you are purchased. Now, the initial recognition, okay? Initial recognition. Initial recognition. Initial recognition. On what? On initial recognition, which we reliably. We have to mention reliably. What we are doing, how much you have paid, how much you have paid. It should be on what model you have purchased it. How much you have purchased? Purchased it for this much. This is going to be the It should be on the cost or it should be on the fair value?
Why it's cost, doctor?
No, okay. Here it is there. If the purchase intangible assets separately, we have to mention, we have to initially recognize that what? You have to recognize that what? It is there?
Cost.
Cost. What they have purchased?
Brand.
Brand. Here the brand name relating to specific. Is it relating to a specific project? Okay, relating to the specific project. Where we have to, initially we have to recognize that what? Initially we have to recognize that cost. Is it okay?
Yes.
Are you clear about this?
Yes.
No. Have a finite life or infinite life? The brand relating specific brand. The brand specialized at value. It is a finite life or infinite life? If it is on the fair value, okay. If it is on the fair value, okay. You don't have anything, is it? If it is, what is happening? It is increasing, okay. It is increasing. One side is, see, what is amortization? Amortization is the value should be decreased. Okay, amortization means systematically decreasing. The value is called as amortization. Now, what is it? Is not decreasing; it is increasing. Yeah? Now it is increasing. In future, the value will also decreases. Okay, value will also decreases. Okay, fair value. One time it will increase, another time it will decrease. If there is a fair value, what we have to do? We have to use impairment. Okay, no amortization. Okay, we should not use amortization. Is that we should not use amortization. Are you clear about this?
Yes.
Think slowly, understand, think, and it will work it out. 500 spent on developing a new line of confectionery, including 150 spent on researching the product before management give approval to fully fund the project. Spent on developing a new line of confectionery chocolates, including how much? 150.
Development and research.
Yes. How much they have spent on research? They have spent on research 150. Is it? They are spending. Development will be how much? Development will be, including development means development is 350. They have completed development. They are developing. They have not completed. Is it? Small words make the real insect. Still they are developing. Are you clear about this?
Yes.
Still they are developing. Okay, still they are developing. If they are still on developing, means still it is in the process. What we have to do? This should be expensed, and this should be capitalized. Training cost for staff to be used. The training amount. See, training cost always, no other option, always to be expensed. Any time, every time. Khalas. Training cost will be expensed. Is it a training cost? Nowhere it can be capitalized. Some points, if you are doing like this, it will be easy for you to understand. It will not change. It will not change. Are you clear about this?
Yes.
Next. Next. They gave another example. They have solved it. Improve has development expenditure 600,000 relating development of a new brand X. It is expected the brand for the product will stay at high level for next 3 years. Annual sales is how much? 400, 300, 200. How much they have spent? They have spent deferred means next year the expenditure to be accounted for coming years. Okay, they have a deferred development expenditure. Definitely, it is for how many years? 3 years, and respectively over the period of over this period, they are selling how much? They are selling a brand at how much? 10. Okay, they are selling the brand is how much? Sells for 10,000. There are two possibilities for writing off development expenditure. You are write off in equal installments. Okay, you are write off in equal installment. How much you have spent? You have spent 600 divided by 3 years. Okay, you have spent 600 divided by 3 years straight away. Or how much is the, what is the total sales? How much is the total sales? Total sales is 400 plus 300, okay, plus 200. 3 years. How much will come? It will come to 9,000 units. Are you clear about this?
Yes.
Now, what they have done, they have taken the units. Okay, units, year 1 units divided by total units. Year 1 unit divided by total units into the expenditure. Okay, into including the expenditure. Are you clear about this?
Yes.
Year 1, year 2 and year 3. Means you have two options. Either you can do it on divide equally, or you want it more accurately, you apply this formula. Is it okay?
Yes.
Next. Tell me the answer. How these costs be treated in financial statements for the year ended 31st December. For the year ended 31st. What they say? They have spent 200 researching new chemicals. Okay. They also spent 430,000 developing a cleaning product. which will not go into commercial production until next year. The development projects meet the criteria of IS 60. How much they have spent? They have spent 20,000 on research. Is it right? And they have spent how much? 40,000 on development. Still, this is not in the next year. Is it? This is not. It will not go into commercial production. Can we capitalize 60,000?
No.
40,000 can be capitalized. Intangible asset and should be amortized.
20,000 will be expensed and 40,000 will be capitalized.
Think. You can amortize only after it is operational. Understand point? This is the condition, amortization. Only after amortization. Is it right? It is there. It is there in the amortization rule. It is there in the C. They say that as soon as commercial production begins. It is there?
Yes.
Okay? You cannot amortize. What they say? They say that we should be amortized. No. Commercial production not started. Commercial production not started. This is also wrong. 40,000 should be capitalized. This is fine and should not be amortized. 20,000 should be written in the statement of work. Is it clear about this?
Yes.
60,000 should be written off. No, we cannot write off. Okay? There is a development cost. Now you are understanding what is the message you got it. Rules you should be very perfect. Okay, rules should be very perfect. Other things will be automatically. Reading is very important. Read the steady text before starting doing the thing. Any doubt is there? Refer the specific point. You will get the answer. Which two of the following will be classified as an intangible assets? Tell me. In the examination, okay, you have to underline like this. Which two of the following is going to be classified? This is what the requirement talks about. Tell me. Training of the staff is never be capitalized. Okay? Internally generated will never be capitalized. Are you clear about this? Is it okay?
Yes, sir.
Okay. I should have not told. I just told in. Okay. Now, next time I will not tell. I will give you option. Sam has provided following information. Project A, 50,000 spent on research during the year. Okay, 50 spent on research. 80,000 spent on this project in the previous year and 20,000 this year. The project was capitalized in previous year. It has been decided to abandon the project. Anywhere, any doubt is there, ask me the meaning. The project at the end of the year. Project C, 1000 was spent on this project. The project meets the criteria of YS 8 to be capitalized. Which of the following adjustments should be made in financial statements? Read again. Financial statement this year. $50,000 spent on the research phase. It is expense or it is expense. Is it right? If it is expense, profit will increase or decrease?
Profit will decrease.
Sorry. $80,000 spent on this project previous year, 20,000 this year. Total how much they have spent? They have spent 100,000. The project has been capitalized previous year, but they have abandoned. They have not continued. They have not continued this project at the end of the year. What we have to do?
Will be expenses.
If it is expense, how much is there? Are you clear about this?
Yes.
Next, 100 was spent on this project this year. The project meets the criteria IS 38 and is to be capitalized.
It will increase 100 non-current assets.
Total is how much?
150.
Answer.
D. D. Answer D. D not correct?
No, just I'm Project B. Spent on the previous year. We cannot take previous year now. One minute. This year is how much? In the previous year, and 20,000 this year. One minute. $80,000 spent on the project previous year and 20,000 this year. $80,000 has spent on the previous year. Okay, we are reducing 10,000. Okay, we are reducing 100,000. This is okay. Okay, this is okay. Now, last year we have spent 80,000. Okay, last year we have spent 80,000. Now we have done it wrong. We have abandoned the project. We have abandoned the project. We have stopped the project. Means what you have to do? We cannot, is it right? We have stopped the project. If we have stopped the project, is it right? We have to decrease how much? We have to decrease 80,000. Yes or no? Last year we have spent how much? 80,000. Is it okay?
Okay.
And this year we have spent, see, your profits will decrease by 150. Okay, your profits will decrease by 150. But what happened? Since we have abandoned the project, whatever the amount we have capitalized last year, we have to make correction for that. Yes or no? Okay, we have to make the correction for that. Okay, we have to make the correction. This is the correction. Okay, I am writing here. This is the correction of last year. Last year. Okay, how much is the correction of last year then? Now, how much is there? Here, see, we are reducing the profit in the statement of profit and loss account. Okay, statement of profit and we are also have to do in the statement of financial position. Because we have abandoned the project, we have stopped the project, ceased the project. Automatically, how much you have, we cannot say 80,000 we have to reduce, 100,000 we have to increase. What is the net effect? Net effect will be how much? Net effect will be, it will be 20,000. Are you clear about this?
No, little bit complex.
No, it's a thinking point. Okay, it's a thinking point. No doubt on that. See what happens. Assume last year you have 80,000. You have spent. Okay, you have spent on this project 80,000, and this year 20,000. What happens? See that the project has been capitalized in the previous year. Yes or no?
Yes.
The project capitalized in the previous year means you have increased the value of the project. Okay, you have increased the value of the project and you have shown it statement of financial position. But what happened in the current year? You have abandoned the project. You are not continuing the project. If you are not continuing the project, what we have to do to this one previous year value? We have done previous year, we have capitalized it. Is that now we have if you don't abandon the project, fine, nothing is wrong. But the moment you have abandoned the project, what we have to do? Whatever we have done capitalized previous year, correction of last year capitalization. Whatever we have capitalized in the previous year, because we have stopped the project, that capitalization value done in the previous year should be corrected, should be reduced. Anyhow, what is there here? What we are doing? We are taking profits will be reduced by how much? Profits will be reduced by 100,000. This is the current year as well as previous year. Whereas capitalization, this is capitalization. How much? This is the capitalization. Capitalization of the previous year you have to reduce by 80,000.
Okay.
Are you clear about this?
Yes.
A little bit. See, challenge, difficult questions you have to understand. Easy everybody will do. Easy questions everybody do. Are you clear about this?
Yes.
Next. Test. Think and tell. First one is true or not? Tell me one by one.
Is to be expressed.
No. It is true or not. They are not asking about the accounting treatment. Okay, is right. Research is originally planned investigation undertaken of gaining knowledge. True or no? False.
But they are asking if it is expressed, right? They wrote development expenditure.
Where?
The question. Treatment of research and development expenditure.
Treatment of research and development expenditure are true or not? According to this. According to that, okay? Yes. It has research is originally and planned investigation undertaken with the prospect of gaining new knowledge and understanding. It has to be
Next.
true or not?
This is true.
This is true. Next. This statement, second statement, they are asking statement is true. They are asking whether the statements are true or not.
True. False.
Just now we have covered depreciation of plant used specifically for new product can be capitalized as part of development cost. Just now, somewhere, I think last of the last statements. Last of the last statements. See the things. Here only we have done. This one. If the item of plant is used for development process, the depreciation on the plant to the development cost in intangible asset during the period that the project meets the development criteria. The depreciation is added. They mention very clearly. Is that they say mention very clearly. What they say mention? They say that depreciation on the plant is added to the development cost in intangible assets during the period. Is it there?
Yes. It's
Okay?
it's true.
It is true. Okay? Next.
True.
Is it okay with you?
Yes.
Next. Try. Take your time. Nothing will happen.
B.
Which one?
Internally generated goodwill.
Which should be included in the company financial position as an intangible asset. Internally generated will not be included. Internally development brands will not be included. You are making a payment, you are acquiring, you are purchasing, anything that has been purchased on successful registration of the payment, it is going to be intangible asset. Is it? In expenditure on completed research, we will capitalize, we will not put it as a intangible asset. Internally, see what question is there, which should be included in the intangible asset. As per IS 38, internally developed brands, no. Nothing internally. Internal generated goodwill, no. Expenditure, that is also internally related, that is not externally related. Anything which are going to be paid, you have to pay to acquire license, you have to pay to get the brand name, you have to pay to get the shares, you have to pay to get the control, you have to pay money, then only it is a goodwill, then it is a intangible asset. If you are not paying, no intangible asset. Are you clear about this?
Yes.
It will not change. 100% it will not change. Okay, next. During the year 31st December, they have incurred on development cost. Tell me, keep calculator. Both the calculators should be there with you. Okay, and for a new product. In addition, they spent 600 on January 1st on machinery specifically used to help develop new product, and 40,000 on the building of brand identity. Commercial is expected to start in 2009. The expected life is 4 years. What should be the value of intangible asset? Is it okay?
Yes.
Next, what you have to do? Think. How much they have done missionary?
40,000 on buildings.
Yeah.
Of our own building, the brand.
How much is there? 60,000. They have used this machinery specifically. They use this machinery specifically for that. It is what we have to do. We have to calculate depreciation. Okay, we have to calculate depreciation. 60,000. 60,000 divided by how many years? 4 years. How much is there?
15,000.
15,000. Okay, 15,000. No, we have to capitalize this one. We should not, any amount which is used for the development of machinery, that amount should be added. You have to add the depreciation amount. We have to add the depreciation. Okay, how much is there? 60,000 divided by 4 years. How much we have to add? 15,000. Yes. Just now we have done now. Just now we have done. Is it right? This is the point. See the things. This is the point. Is it okay?
Yes.
Depreciation of plant used specifically on development of new product can be capitalized. It is true. Now, we should not take machinery. Machinery is separate. Commercial, is it right? No, we should not, whether we can we take the land, building value? Land, buildings, machinery separately. We are talking about the development. In the development cost, we have to take the development cost, and any depreciation we have incurred, we have to take the value of depreciation. That's all. Okay, we should not take the buildings, we should not take machinery, we have to take only the depreciation. Depreciation which has been the plant used for the development purpose. For that plant, we have to take the depreciation. Are you clear about this?
Yes.
Only that much only. What is the answer? Is it clear?
Yes.
Okay, now tell me. If you have taken the printout of the, huh?
A and C.
You should have technical feasibility and you should be use or sell.
Sorry.
Okay, next, tell me.
The first one, capitalize as intangible. Second one is expense. Third one, I confused. Last one is expense.
Marketing, this is a spent on marketing. Spent on marketing is always, you cannot capitalize. Okay, spent on marketing. You see, you are spending on marketing. Marketing expenses, you see, selling and distribution expenses. Is it right? It is nothing but it is a selling and distribution expenses. Are you clear about this?
Yes.
Marketing is a selling and distribution expenses. Is it okay?